Hello, hello. All right, guys. Hey, if we want to let more people in, we gotta boost the server. Gotta boost the server. We are at max capacity at 500. Not on my card, so I can't. I gotta add a new card to my Discord. Otherwise, I would just go boost it. Let's get it, y'all. Let's get after it. Let's see what we got going on. Appreciate y'all being here. How's everyone's trading morning been so far? Benny says great. Jennifer, great. Jay, no trades. Brandy, thumbs down. What's going on, Brandy? Green shouldn't even be here. Well, then either Drew Brees, A, go away in the most respectful, positive way, or B, hang out, catch some vibes, catch some education, but don't take any trades. Sack Honda, you're an OG and you don't have the bull symbol on. I'm disappointed. No bull tag. Dr. Profits does, though. So does Ali Wells and 2K Lewis. So does Jay Diff. Come on. Let's get it. Hey, welcome, Lee. Welcome, Tyler. Welcome to the fam. You gotta click on the bull tag and then adapt the tag. Yes, sir. Okay, let's see what we can get here. We got screen share going. The 5 minutes not telling me a lot. We're still back inside, or actually, excuse me. We're slightly above the 15-minute range. If you are new to the screen share, we have pre-market high mapped out in the blue. We have pre-market low mapped out in the blue down here. We have 15-minute low in the green, and we have 15-minute high in the green right here. So our green levels are the 15-minute high and low for our first 15-minute range. Our blue levels are pre-market high and pre-market low. As you can see, we came down aggressively touched. We touched pre-market low to a T here, and then we move it up. We're currently above the 15-minute high. So this has been a no-go range for me. I want to see some clear trend below pre-market low or clear trend above pre-market high. That's what I would like to see personally for our trades today. That would be ideal for us to see. So FOMC, the interest rate decisions with which rates are remaining unchanged, just happened. It was 17 minutes ago. However, Jay Powell is going to come on and start speaking. This is the real 7-foot Jay Dunn. Someone asked. I'm not quite 7 foot. I'm 6'7". Surprise, and he's going to come on and say the same thing. The Federal Reserve maintains its integrity and duty to serve the American people, and our decisions to depend remnant on the data. Duke could be playing for the Lakers, but chose to be a trader DJ like us. That's crazy. I wouldn't be playing for I would have been playing for the Lakers as a kid. Now I'd be playing for the Nuggets. No Zoom, because Jared Tendler is going to be on at Power Hour. Which, again, we pay good money for him to be there. It's a perk of being inside Team Bull. So I recommend you guys tap in the Discord. You guys tune in to Jared Tendler, and if not, you guys listen to the recording. Oh, yes. Our dual mandate to the American people is to follow economic policy dependent on the data. Crazy. That's crazy. As a reminder, guys, the market is closed tomorrow in observance of Juneteenth. I will not be live trading tomorrow because I will have nothing to live trade. I'll be trading fishing hooks with fish in a lake around Denver. Can I windmill off too? I don't think I can windmill anymore. There's a point where I could. I can still throw it off the... Woo! Excuse me. Thank you, Gene. I can still throw it off the backboard, slam it. Ban, David. We have got to have the Pacers force a game 7. We got to have the Pacers force a game 7. By any means, we cannot let OKC get away with this. We can't let it happen. The free throw merchant does need to be banned. That is facts. Stang. Still got nothing in this area, guys. I'm watching for trades. Nothing high probability for me. Nothing high probability for me. Sticking to cold from the streets. And we drop. We'll see. We'll see what J Powell starts to say. I would typically say I usually really like trading the day after FOMC. The day after, so the Thursday after FOMC is usually great. I do have the recording. I just didn't know if I was going to post it or not. Should I post the recording? I didn't plan on it. Who needs the recording from last night's webinar? It's pretty fire. It's pretty fire. We went hard for an hour and a half. Hard. Shoot like that. Scuba Steve was at work. Mike, that's you. You're the boss, man. I'm just the carrier of the fire education. Jade Dunyan rings. That's crazy, Jade Gids. That is crazy. I've heard a lot of them. I ain't ever had my name had onion rings in it. That is diabolical work.
Jade onion rings?
It should allow him to unmute. I don't know why it won't. I can't unmute him. Let me see. Let me see if it's something with the settings. Permissions. Admin. Let him speak. Try now. Try to unmute. There's a speaker on the stage. That's odd. I just updated the perms. It should let you. I don't know what's going on. It says server muted. I try to leave. It should have let you speak there. Why is this server muted? It even makes sense. Your speaker should be able to speak. What's your thoughts on how defense and oil companies will do in the next few months? Well, it just depends. Unfortunately, if there's war or not. I think your signs are likely up versus down. You got Jay Powell starting to speak in 4 minutes. I'm not in any trades. Green Eyes, I don't know what's happening, bro. I try to make you a speaker. As a reminder, TikTok, I'm also live on YouTube. We will have the full screen share going next week. Full screen share going next week. Make sure y'all tap it and hit that subscribe button here on YouTube. I also got the free webinar being downloaded and uploaded, tonight. Free webinar will be uploaded tonight to YouTube on this channel, J Dunn Trades. Hey, this man GD said J Dunn has made me so much money. He's the best. Hey, let's go. That's one of my millionaire students. This man GD. He's the one who turned $5 into 500,000. I'm just playing around for y'all to take things too seriously. Up 600 today with Bro Team Bull. Let's go, Vipin. Come on. Come on. As a reminder, guys, we have Jared Tendler coming up in less than an hour. If you guys would like access to Jared Tendler inside the free Discord, send me a DM on Instagram. At JDunn Trades. Send me a DM on Instagram at JDUN Trades. You've inspired me to focus on my health and trading. Let's go. Yup. You guys got to tap into the free Discord for Jared Tendler. Got Jared Tendler coming. Coming soon. Got Jared Tendler coming soon. It's one of the many perks of being inside Team Bull. Oh boy. Jadon, is that a fake jet you're in your profile pic? Yeah. Very fake. I decided one beautiful Saturday morning, I was like, you know what? I'm going to go put my reputation on the line, go find a jet that I can sit in, take some pictures, and tell people to buy my course. That was the exact blueprint there. I'm just giving you shit right back at you. Right back at you. No, we're crazy. All right, we got J Powell coming on. Should we play the meeting? Or he's already on. Well, let's listen to Mr. Too Slow speak.
Following growth of 2.5% last year, GDP was reported to have edged down in the first quarter.
Oh, Jesus. Grizzly and GDP are edging?
Exports that were driven by businesses
Goodness. What's up with everyone edging today?
ahead of potential tariffs. This unusual swing has complicated GDP measurement. Private domestic final purchases, or PDFP, as we call them, which excludes net exports, inventory investment, and government spending, grew at a solid 2.5% rate. Within PDFP, growth of consumer spending moderated, while investment in equipment and intangibles rebounded from weakness in the fourth quarter. Surveys of households and businesses, however, report a decline in sentiment over recent months and elevated uncertainty about the economic outlook, largely reflecting trade policy concerns. It remains to be seen how these developments might affect future spending and investment. In our summary of economic projections, the median participant projects GDP to rise 1.4% this year and 1.6% next year, somewhat slower than projected in March. In the labor market, conditions have remained solid. Payroll job gains averaged 135,000 per month over the past 3 months. The unemployment rate at 4.2% remains low and has stayed in a narrow range for the past year. Wage growth has continued to moderate while still outpacing inflation. Overall, a wide set of indicators suggests that conditions in the labor market are broadly in balance and consistent with maximum employment. The labor market is not a source of significant inflationary pressures. The median projection for the unemployment rate in the SEP is 4.5% at the end of this year and next, a bit higher than projected in March. Inflation has eased significantly from its highs in mid-2022, but remains somewhat elevated relative to our 2% longer-run goal. Estimates based on the Consumer Price Index and other data indicate that total PCE prices rose 2.3% over the 12 months ending in May, and that excluding the volatile food and energy categories, core PCE prices rose 2.6%. Near-term measures of inflation expectations have moved up over recent months, as reflected in both market and survey-based measures. Respondents to surveys of consumers, businesses, and professional forecasters point to tariffs as the driving factor. Beyond the next year or so, however, most measures of longer-term expectations remain consistent with our 2% inflation goal. The median projection in the SEP for total PCE inflation this year is 3%, somewhat higher than projected in March. The median inflation projection falls to 2.4% in 2026 and 2.1% in 2027. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. At today's meeting, the committee decided to maintain the target range for the federal funds rate at 4.25% to 4.5%, and to continue reducing the size of our balance sheet. We will continue to determine the appropriate stance of monetary policy based on the incoming data.
Price action is still looking like it wants to move up.
The balance of risks.
See what he keeps saying, but price is looking good to the upside
Changes
so
to
far.
trade, immigration, fiscal, and regulatory regulatory policies continue to evolve, and their effects on the economy remain uncertain. The effects of tariffs will depend, among other things, on their ultimate level. Expectations of that level, and thus of the related economic effects, reached a peak in April and have since declined. Even so, increases in tariffs this year are likely to push up prices and weigh on economic activity. The effects on inflation could be short-lived, reflecting a one-time shift in the price level. It's also possible that the inflationary effects could instead be more persistent. Avoiding that outcome will depend on the size of the tariff effects, on how long it takes for them to pass through fully into prices,
Market doesn't
and
like that.
ultimately on keeping longer-term inflation expectations.
Market does not like that uncertainty there.
Our obligation is to keep longer-term inflation expectations well anchored and to prevent a one-time increase in the price level from becoming an ongoing inflation problem. As we act to meet that obligation, we will balance our maximum employment and price stability mandates, keeping in mind that without price stability, we cannot achieve the long periods of strong labor market conditions that benefit all Americans. We may find ourselves in the challenging scenario in which our dual mandate goals are in tension. If that were to occur, we would consider how far the economy is from each goal and the potentially different time horizons over which those respective gaps would be anticipated to close. For the time being, we are well positioned to wait to learn more about the likely course of the economy before considering any adjustments to our policy stance. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate based on what each participant judges to be the most likely scenario going forward. The median participant projects that the appropriate level of the federal funds rate will be 3.9% at the end of this year, the same as projected in March. The median projection declines to 3.6% at the end of next year and to 3.4% at the end of 2027, a little higher than the March projection. These individual forecasts are always subject to uncertainty, and, as I've noted, uncertainty is unusually elevated. And of course, these projections are not a committee plan or decision. At this meeting, the committee continued its discussions as part of our 5-year review of our monetary policy framework. We focused on issues related to assessing the risks and uncertainties that are relevant for monetary policy and the potential implications for policy strategy and communications.
Tempted looking at this price action to go long.
Outreach and public
It sucks because you can say one word and it dumps.
including Fed Listens events around the
We
country.
made another higher
and a
low
research
here.
conference that we held.
We're holding 200, holding our 15-minute high. It looks like it wants to continue on up.
Feedback, and we will
But you
take
could
on
say
board
one thing
lessons of the
and rip
last
us
5
below the
years
screen line here, you guys see.
determining our findings. We intend to wrap up any modifications to our statement on longer run goals and
We'll see.
monetary policy
Nothing
strategy
yet.
by late summer. After that, we will consider enhancements to our suite of communications tools, including the SEP. The Fed has been assigned 2 goals for monetary policy: maximum employment and stable prices. We remain committed to supporting maximum employment, bringing inflation sustainably to our 2% goal, and keeping longer-term inflation expectations well anchored. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. Everything we do is in service to our public mission,
Your public
and
mission.
we at the Fed will do everything we can to achieve our maximum employment and price stability
Employee
goals.
price stability and maximum
Thank you.
employment.
I
Oh
look
my
forward to your
gosh, it'll be
questions.
constant.
Thank you. Colby Smith with the New York Times. To what extent has the more limited impact from tariffs at this stage on inflation changed your view on what the ultimate economic fallout will be from these policies and the timing of
Oh, she's got
when,
puts.
they materialize in the data?
Economic fallout.
So,
She's pissed.
we've had 3 months of favorable inflation readings since the high readings of January and February, and that's, of course, highly welcome news. Part of that just is that services, core services, both housing services and non-housing services, have really been grinding down toward levels that are consistent with 2% inflation. So that's the good news. We've had goods inflation just moving up a bit, and of course we expect, as you point out, we do expect to see more of that over the course of the summer. It takes some time for tariffs to work their way through the chain of distribution to the end consumer. A good example of that would be goods being sold at retailers today may have been imported several months ago before tariffs were imposed. So we're beginning to see some effects, and we do expect to see more of them over coming months. We do also see price increases in some of the relevant categories like personal computers and audiovisual equipment and things like that that are attributable to tariff increases. In addition, we look at surveys of businesses, and there are many of those, and you do see a range of things, but many companies do expect to put all or some or all of the effect of tariffs through to the next person in the chain, and ultimately to the consumer. Today, the amount of the amount of the tariff effects, the size of the tariff effects, their duration and the time it will take are all highly uncertain. So that is why we think the appropriate thing to do is to hold where we are as we learn more. And we think our policy stance is in a good place where we're well positioned to react to incoming developments.
So in terms of how we should interpret the rate cuts penciled into the SEP, is this reflecting that there's this expectation that underlying inflation will just stay well enough contained that allows the committee to eventually move ahead with those cuts? Or is it about, responding to a deterioration in economic activity, let's say? I mean, how should we make sense of the forecast?
So if you look at the forecast, you will see that people do generally expect inflation to move up and then to come back down. But we can't just assume that. Of course, we don't know that. And, our job is to make sure, one of our jobs, to make sure that a one-time increase in inflation doesn't turn into an inflation problem. And that, again, that
There we go, green
size
eyes.
of the effects, how long it takes for them to come in, and ultimately on keeping inflation expectations.
What's up, Mr. Green?
Hi, and thanks, Chair Howard Schneider with Reuters. If you look at the...
I got it. I reset the server settings. Let's go.
Today and adjusted over the full time horizon you've got there, you've taken about...
Hold on, I still can't hear you. I can see you speaking, but my speakers are...
And you ended a higher rate at 2027 than you would have in the prior forecast. Is that a result of a sense that tariffs will lead to more persistent inflation?
Check.
Is it a result of reassessments of rate or short-term neutral rate? Is it why are you on a slower path?
So
I can see him talking, I just can't hear him.
in the nearer term,
I can see him
as you
talking,
get
for
out
sure.
To the
Damn, that long
later
would have printed.
years, it's hard for anybody to know where the economy's going. You didn't see people move.
All right, talk again.
Estimate of the neutral rate, for example.
Can you hear me coming through?
Now I can hear you. What's
Are
up?
probably slow moving. So I think if you look at what's happening.
Now I can hear you.
Since March, this is since March, right? You see a little slower growth, just a tiny tick up, a 1/10 tick up in unemployment, and you see inflation moving up 0.3. And by the way, it was a similar move from the December SEP to the March. So that's what you see. You see the effects of tariffs. I think we learned in April, after the March meeting, that substantially higher tariffs were likely. And then since then, the estimates of where the tariffs will be have actually moved back down, although still at an elevated level. So we're adapting in real time. And what you see is an accumulation of individual assessments.
You say in the statement that risks have diminished on that front, but the July highest, drop dead date for all the Liberation Day tariffs is still out there and unresolved. You've got now exchange of missiles between two Middle East adversaries with a possible U.S. involvement. How can you justify saying that risks have diminished?
So what we said was that uncertainty uncertainty about the economic outlook has diminished but remains elevated. Many surveys say that they do. So, and that's actually a line from the Teal book, which you can see in 5 years. Remember to check that. No, but if you think about it, tariff uncertainty really peaked in April, and since then has come down, and that's really what that's just acknowledging. It's diminished, but still elevated. That it's uncertainty. So I think that's an accurate statement.
Let's see. Lots of uncertainty.
Associated Press. There is an argument out there in favor of cutting rates more immediately. Inflation has continued to cool and is back to roughly 2% despite the tariffs. And I guess I also wanted to ask about cracks in the job market.
What are you looking for, Green Eyes?
Slowing, concentrated in just a few industries.
We
see
so
some
I want to
housing
be
data
above 050.
this morning that's been pretty weak.
I'm interested in taking a long
Do you
entry.
see any concerns that, the economy is weakening and that is
I
a
like
reason
longs
to cut
too.
rates going forward?
So we do, of course, monitor all those things. I think if you look at the overall picture, what you're seeing is 4.2% unemployment and an economy that's growing at a rate hard to know given the unusual flows in the first quarter, but it appears to be 1.5–2%, maybe a little better than that. Sentiment has come up off of its very low levels. It's still depressed. So, you can point to things. The housing market is a longer run problem and also a short run problem. I don't think it's indicative of, basically the situation is we have a longer run shortage of housing, and we also have high rates right now. I think the best thing we can do for the housing market is to restore price stability in a sustainable way and create a strong labor market, and that's the best thing we can do for the housing market. You asked about the job market. Again, look at labor force participation.
Not enough
wages,
online pay with
look
Phil,
at
need
job
more.
creation. They're all at healthy levels. Yeah. I would say you can see perhaps a very, very slow continued cooling, but nothing that's troubling at this time. But we watch it very, very carefully. So overall, again, the current stance of monetary policy leaves us well positioned to respond in a timely way to economic developments, and for now, and we'll be watching the data carefully.
Well, just quickly on, given that, there are concerns inflation will rise, but there is the alternative scenario that tariffs would bring demand destruction and slow growth sufficiently, and that would have a little inflation. Do you see odds of that scenario? Do you see that scenario coming true? And how many months of cool inflation would you need to see before concluding that maybe that lower inflation scenario is taking place?
So this is the conversation we had today and yesterday. There are many different scenarios, many combinations of scenarios where inflation either doesn't prove out. And I think what you see people do, looking ahead at a time of very high uncertainty and writing down what they think the most likely case is. No one holds these rate paths with a great deal of conviction, and everyone would agree that they're all going to be data dependent, and that you can make a case for any of the rate paths. I think if you see in the S&P.
I agree, DB.
And, we do this once a quarter.
We need the rates lowered.
Particularly at this time, but it does reflect. If you see somebody writing down, a rate path that involves cuts, that's them saying, yes, I think we will get to a place, more likely than not, where cuts will be appropriate, and it could be a joint probability of a number of possible outcomes. Again, remember how much uncertainty we face, though.
He has said uncertainty at
Chair,
least
if you could describe for us
5
those
times.
scenarios, how do you get to a
10
place?
times.
I'm noticing that the uncertainty levels in your forecast are very high. How do you get to
You don't say.
the confidence in the outlook for, say, inflation and
Demonstrate
growth
this
or
range.
unemployment rate?
We can have
How many
a
months does it take, and what do you want to see in the data to get to that level of confidence to actually
Bro said it
reduce rates
again.
off the restrictive level?
So it's
In the last 30
very hard
seconds,
to
yep.
say when that will happen. We know that the time will come. It could come quickly. It could not come quickly. As long as the economy is solid, though, as long as we're seeing the kind of labor market that we have and reasonably decent growth and inflation moving down, we feel like the right thing to do is to be where we are, with where our policy stance is.
That's one thing he's certain about is uncertainty.
We feel
That's
like
for
we're
sure.
learned a great deal more over the summer on tariffs. We hadn't expected them to show up much by now, and they haven't.
That's
And
crazy.
We'll see to the extent to which they do over coming months, and I think that's going to inform our thinking for one thing. In addition, we'll see how the labor market progresses. So at some point it will become clear. I can't tell you exactly when that will be. And meanwhile, we'll be watching the labor market very carefully for signs of weakness and strength, and tariffs for signs of what's going to happen there. And of course, there are many developments ahead. Even in the near term, developments are expected on tariffs. So I think we don't yet know with any confidence where they will settle out. We have an estimate, and it's I think all estimates are now pretty close together, but it's highly uncertain.
When you say estimate of the impact of tariffs on the core PCE, is that what it is? And could you share that?
Yeah, what you start with is what's the effective tariff rate overall, and people are managing to that. But the pass-through of tariffs to consumer price inflation is a whole process that's very uncertain. You know, as you know, there are many parties in that chain. There's the manufacturer, the exporter, the importer, the retailer, and the consumer. And each one of those is going to be trying.
This is
to be the one
him just saying in fancy ways he doesn't know what's going to happen with tariff and he's uncertain. Literally, he's just drawing that answer out to 10-minute explanations.
But that process is very hard to predict, and we haven't been through a situation like this, and I think we have to be humble about our ability to forecast it. So that's why we need to see some actual data to make better decisions. We'd like to get some more data, and again, in the meantime, we can do that because the economy remains in solid condition.
Okay, let's see. So we react to this trend line down here.
Chair Powell, I guess I'm wondering if you could explain a little more the divergence we see in the dot plot, particularly around the 2025 rate projections. I realize this is, you have one group of officials that are putting down no cuts, another that are putting down more than one. And again, recognizing that could be difficult to summarize, but is it a matter of people having a different outlook or a different reaction function, a different commitment to defending against another
It
inflation?
might end up being an inside day. We'll see.
How did that play out over the last 2 days?
So you're right. This is often the case. We have a pretty healthy diversity of views on the committee. We did have strong support for today's decision and broad agreement that our policy stance does leave us in a good place. But I would point to two factors, and you mentioned them. The first is just that parties have a diversity of forecasts, and they do align with where their dots are. So if you have a higher inflation forecast, you're going to be less likely to be writing down, more cuts. But remember, as we see more data, we're going to learn more about where inflation is headed, and that means when it is time to look at normal, resuming our normalization process, the differences you see should be smaller because we'll have seen actual data. Right now, it's just a forecast in a very foggy time. So that's the first part, is forecast. Secondly, people can look at the same data and they can evaluate the risks differently, as you know. And that includes, the risk of higher inflation, the risk that it'll be more persistent, the risk that the labor market will weaken. People are going to have different assessments of that risk. So that you put that in there too. So those are the two ways the two things I think that drive these things.
Drummer Jay Dunn.
With, as I mentioned earlier,
With the
with
bodies at the
uncertainty
flow,
as
with the
elevated
bodies
as it
at the
is,
flow.
no one holds these rate paths with a lot of conviction. So that's really where it is. It's a function of those things, and I think as the data come in, you should see those differences.
This guy's boring me.
You've said the policy is in a good place and that it's modestly
This guy's
restrictive.
boring me, man.
All the uncertainty you just talked about, tariff levels, uncertainty on the pass-through, is it price increases versus margin compression? Some of the softness that Chris talked about in labor and housing. Why wouldn't it be better to have rates at a more neutral setting as the economy heads into this period?
I'm also sending out the Jared Tendler link, guys, a few minutes early.
Backward at the data, that's what you would say, but that's not. We have to be.
I'm not seeing much here.
And the thing that every forecaster, every outside forecaster, and the Fed is saying is that we expect a meaningful amount of inflation to arrive in coming months, and we have to take that into account. So I think a backward-looking look would lead you to a neutral stance, but we can't. We have to look at that, and because the economy is still solid, we can take the time to actually see what's going to happen. There's a range of possibilities on how large the inflation effects and the other effects are going to be. So we'll make smarter and better decisions if we just wait a couple of months or however long it takes to get a sense of really what is going to be the pass-through of inflation and what's going to be the effects on spending and on hiring and all those things.
Michael McKee from Bloomberg Radio and Television. Your friend down at 1600 Pennsylvania Avenue continues to lob insults in your direction, and I'm wondering, given now that the Supreme Court has maybe carved out the Fed from some of the legal implications of that, whether this is just noise
insults
that
at
the
you.
markets and everybody should ignore until your term is up, or whether you worry that it could lead to more pressure on confidence on Wall Street, on consumers, about the outlook for the economy.
Okay. From my standpoint, it's not complicated. What everyone on the FOMC wants is a good, solid American economy with strong labor market and price stability. That's what we want. We think our policy is well positioned to, right now, to deliver that and to be able to respond in time and way as the data lead us around. The economy's been resilient, and part of that is our stance. And again, we think we're in a good place on that to respond to significant economic developments. That's what matters. That is what matters to us. Pretty much that's all that matters to us.
I need to ask, assuming you are not reappointed, would you stay on as governor when your term as chair ends?
I'm not thinking about that. I'm thinking about this.
Thanks, Mr. Chairman. I guess with workplace raids increasing, picking up significantly.
Bro doesn't give a damn about the drama.
Workplace raids.
So you're asking immigration?
Yeah.
You know, I wouldn't want to speculate. One way to get at that from an economic standpoint, we of course don't comment on immigration policy. It's not ours to make or comment on. But what you see is an unemployment rate that has been really solid and at a low level, not really increasing.
Okay, let's see. We're breaking this down.
Well within the range of mainstream estimates of maximum employment. And that means, like, part of that is that labor demand.
Only downside is we're back in the 15-minute range here.
Kind of moving down at the same rate. Labor demand is softening. You see that in the job creation, but it's still kind of at a healthy level. And labor supply is diminishing because the immigration numbers that we see are much lower than they were. So those two factors, supply and demand, that's what has kept the unemployment rate in a reasonably stable place.
Okay, thanks. The other thing I wanted to follow up on is if you could elaborate on the potential changes to the SCP that you suggested were part of the framework review, I think.
So the framework review really has two tracks, right? The first track is our policy framework that is reflected in the consensus statement. And we've said that we would finish that and announce it by the end of the summer. So we're well along in that process. We've had the meetings that we need to have, and we're now going to be going into, into discussions about, specific changes to language. So that's the framework part of it. The second part of it is our communications tools and practices. Pardon me. And that part comes next. Okay, that's what we're going to do in the meetings this fall. Actually, what we did at this meeting, though, is we sort of prepared the ground for that. We had a meeting where we talked at a high level about a number of ideas. The SCP is part of it. Many other ideas.
Oh my gosh, free falling.
Communications can be improved. There are a number of ideas. People offered a really, it was a great conversation. Number of ideas, but we're going to look at those with staff briefing and a lot of thought in the fall. And I would say when it comes to changing communications, I would only support things really that I would only implement things that have very broad support. And also, you want to be really careful because I think our communications are pretty well received. They're not broken. So more is not necessarily better, but better is better. So we're going to be looking at ways to do things that will improve the clarity of what we do for the benefit of the public.
Thanks, Chair Powell. Kelly O'Grady, CBS News. You're famously known as the guy that makes decision based on data instead of speculation. You said today the inflation data is in a good place. We don't know how tariffs are going to impact prices going forward. That's uncertain. But I've got to go back to the last time that you cut rates in December, and there was still the what if of tariffs. So what made you feel comfortable cutting then when inflation was higher than where it is today and you didn't cut today?
Well, the forecast for inflation in December was 2.5. Core PCE for 2025, the forecast was 2.5%, which is a good inflation forecast. I think what we've learned is that, and this was long before we had any idea of what the actual policies would be, we've learned that tariffs are going to be substantially larger than forecasters generally thought. And our forecasts are generally not particularly different from those of other, well-resourced forecasting operations. So what we learned, and particularly in April, was that very substantially larger tariffs were coming, and that would mean higher inflation. That's what happened. And so now you saw 2.5.
He's basically just saying he's uncertain in a million different ways. That's what he's saying.
In March, and you see 3.1% now. So it's 0.6 higher inflation for 2025, and that's a big part of.
Yeah,
of
the only
change.
possible
That's-
short I saw was
that's
this
the
candle close down
defense.
here, but there's too much risk
Tariffs that are,
on this upside,
we don't know where
or on this
they're gonna
downside,
land,
excuse
but
me.
It's pretty apparent they're going to land higher than outside forecasters were really guessing at the end of last year.
My follow-up to that, I think consumers, right?
That's why Jared Tendler is starting now, guys.
When it comes to mortgages, car loans, small businesses want to take out more manageable loans. When you look at the cumulative inflation over the past 5 years, prices have risen over 20%. It's been a rough road. So what is the tipping point then for the wait and see approach in terms of how much it's going to help versus when it hurts the American consumer?
Well, I mean, we're trying to restore price. The best thing we can do for the public that we serve is restore price stability. If we can, and we will, restore price stability, meaning 2% inflation on a durable,
50.
sustainable basis. That, and also maximum employment. If we restore those things, that's the best thing, and that is our goal. The best thing we can do for the American people, for households and businesses, that is the ultimate thing that we can deliver. And they can make their decisions without having to think about inflation all the time. So in the meantime, we have to keep rates high to get inflation all the way down. They're not very high, let's be honest. I would say policy is modestly or moderately, probably modestly now restrictive. If you look at the economy, it's not performing as though it were performing under very strict monetary policy, very restrictive monetary policy.
Basically means he's not in a rush to cut these rates.
And so what it will take is confidence that inflation is coming down. Now, I would say without tariffs, that confidence would be building, because if you see what's happening with non-housing services and housing services, which are the other two big pieces other than goods, those are coming down really nicely now. So I think we have to learn.
I like this area 925 to 945 for shorts. It's the only area I see, but stops have to be. It's just a high risk because this candle highs up here at an 80.
Start to make a better judgment. So that's what we're.
I mean, if you had an ad right around here, it wouldn't be so bad, 30, 35 points, but adding lower, that's a lot of risk on this candle.
Real wages are moving up at a healthy clip now. And inflation is, 2.3% headline inflation over a 12-month basis. So it's a good economy and a solid economy with decent growth.
Thank you, Chair Powell. So you're saying that uncertainty has come down.
Come on, pop a little higher. I swear if they just
Has come down over the past 3 months.
they dumped that before giving us a chance.
So are you indicating here that Americans should expect some sort of economic pain?
What are you looking for, green eyes?
half of the year?
I'm not saying that at all.
Well,
From
I
our
need to see a retest. If I'm
what I
going
can say
short,
is
I'm going to
that
look
the
at
U.S. economy is in
NQ
solid shape. Inflation has come
21.940
down.
retest to
Unemployment
go
rate
short.
remains 4%.
That's what I like too.
As I mentioned, real
And
wages
if we're going
are
long,
up.
I need to see at
It's
least
good.
not becoming seven.
Job creation is at a healthy level.
968 to be exact, at least a break over that.
Labor force participation in a good
But
place.
that could also be false break
And what
and
we're waiting for to
retest
reduce
short
rates
than
is to
So
understand what will happen with
predominantly, I'd look at
tariff
940
inflation.
for retest to short to make first play.
There's a lot of uncertainty about that. Every forecaster you can name who is a professional
Testing a small size of shorts.
forecaster with
The 20s.
adequate resources and forecasting.
High risk, very high risk here.
You know,
25.
everyone that I know
I'll add again at 40. Stop if we get a strong move above
in
60.
coming months from tariffs, because someone has to pay for the tariffs. And
We got a very baby
someone in
size.
that chain that I mentioned between the manufacturer.
But I did try the shorts, everyone. I tried the shorts.
The retailer, ultimately somebody putting it into a good of some kind, or just the consumer buying it. And all through that chain, people will be trying not to be the ones who pick up the cost, but ultimately, the cost of the tariff has to be paid, and some of it will fall on the end consumer. We know that because that's what businesses say, that's what the data say from past that. So we know that's coming, and we just want to see a little bit of that before we make judgments prematurely.
Follow up on that. So you spent years ago talking about how you're data dependent, and be a little more direct on
If you want high risk, you can add again. You can add again in the 30s. Stop's got to be a strong move above 60, but it's the only area I like for shorts in here.
Monetary policy has to be forward-looking. That is elementary. You've got to be looking at. I always talk about the incoming data, the evolving outlook, and the balance of risks. We say that over and over and over again, right? So it's always forward-looking. If at the very beginning of the pandemic, we cut rates to zero immediately. Nothing had happened. We just knew that it was going to be really bad, right? So we took very aggressive forward-looking, because we knew things were going to be unusually difficult. So, of course, this is something we sort of know is coming. We just don't know the size of it. And again, the economy seems to be in solid shape. So the labor market's not crying out for a rate cut. Businesses.
This is the main area, like this is
A bit of
40s.
shock after April 2.
Lower
You
risk
see
here.
business sentiment, you talk to business people now. There's a
If
bit
we
of
end up
different
breaking
feeling.
above
People are working
maximum
their
of
way
80,
through
you got to
this,
stop.
and they understand how they're going to go, and it feels much more positive.
This is the area I like this. This is the main area. You say above 80, that's not valid anymore. I'll take
Again, we think
a
there are
loss on my,
policies in a good place.
what is it, 10 micros, so my mini.
Thank you, Amara Moakley with Bloomberg. Chair Powell, in February, you told Congress that the Fed is, quote, overworked, maybe not overstaffed. Then in a memo to staff in May announcing a deferred
Poor mini.
resignation program at the Fed, you said you wanted to ensure that the Fed was, quote, right-sized. Those two statements appear to be at odds with one another. Could you
If we hold this up here, I was going to say we can also look for, we had less volume on that move up. If we had higher volume, I'd say we can look for a pullback to that previous pre-market low and rip up.
Overstaffed. And I said no.
It's all data dependent right now, so we'll see. I'm going to stick to my plan. It's low size.
They work extremely hard at the Fed, and I know they work hard at Bloomberg too. So, but we work hard. But I would say this. So we are careful stewards of public resources, and sometimes you need to show that. So there have been several times in our history, modern history, where the Fed has said, you know what, we're going to do a buyout. We're going to show the public. We're going to demonstrate that we are good stewards of public resources. So we thought, and I thought that this is a time when we can, we grow at about, our headcount is growing at about 1% a year. So over the course of a couple of years, we're doing a careful scrub of the board and all the reserve banks. And we're going to
Better rip this up, huh?
10%
Suckers are going to stop me out.
employees who can do something else, where we can streamline our operations, and we think we can get there in a couple of years. We think we can do that, and we think
I had faith for that after that aggressive candle move down.
without taking risk to carry
I
out
had
our
faith
business
for that.
operations. So this is something you do very carefully, thoughtfully.
We'll see.
And you do it, again, respecting that we have critical missions to carry out. I've had experience, a lot of experience in my prior careers, with headcount reductions and things like that, and this is how you do it professionally. You do it carefully, thoughtfully, with a lot of planning, and you do it over a period of time. And I think the Fed will be fine. I think no one will notice any decline in our ability to carry out our missions. And I think it's just us wanting to demonstrate to the public that we are.
If we break
actually
back above that
good stewards
70,
of
I'm going
their-
to stop
of
this.
their resources.
Again, it's very light, so
Effectively wiping out 10 years
I'll let it chill.
So
This is the main area I liked for the lower risk ad. Let's see if we can get back down.
How is progress on reducing headcount levels so far? Are you on track to meet the goal?
we're just at the very beginning. As you know, we're doing a buyout program.
Back near break even with those ads, guys.
I think many organizations find that they can do this. You don't want to do it every year or anything, but you
I'm going to
can
move
do
my
it
stops even further down.
and you want
So it'll still be a little red, but
not
won't get out of
interfere
hand.
with your ability to perform
I'm going to put them at
your
60.
jobs.
Come on.
Chair Powell, Claire Jones from the Financial
Move
Times.
down.
As you're no doubt
Move
aware,
down.
the
Come on.
Committee has tabled its version of the reconciliation bill this week, and I was
Move down.
wondering if you could tell me a little bit about the tenor of the debate at the FOMC over the past few days on fiscal policy and the degree to which that influenced people's projections.
No,
for
don't
2026
bounce.
and beyond.
Don't
Thank
bounce between the 50-minute low and the pre-market low. Move down.
We don't sit around.
I did move my stops to lower though, so it'll still be slightly red, but not by
It's
much.
fully exogenous, and so we actually, really didn't talk about the bill or the contents of it. It's still evolving. When it gets closer, it's. Remember also, we have a very, very large economy, and the effects will be at the margin.
Come on,
I expect
move down.
They may already be in, but they will
Move
be
down, puppy.
An estimate, but it's not a major thing. It's nothing that we discuss. It may have been
Took the ad up there. You're in the green.
as
I want to see more though.
and,
I want to see more. I gotta see more. I'd like to see a flush pull at 9:15, but manage how you see fit.
specific.
Come on.
Thanks, Chair Powell. Neil Irwin with Axios. There have been some cutbacks in economic statistics.
Stops are at 56.
worries that long-running problems around funding and response rates maybe get
Got a nice ad on that pop up.
concern on your radar.
Original
How much
plan.
confidence do you have
First ad was lower in the
that
20s,
assess the
in
economy
26.
right now?
So
You know,
still will be slightly right if it hits my stop,
the
but
data we get right now,
pretty much
we
break
can
even.
do our jobs. I'm not
in terms of how
concerned
I
we can
look
do our
at
jobs.
risk.
That's not the point. The point really is that we are starting to see,
Hard stops
labs
are in though.
and important gatherers of data are saying that they're having to cut back on the size of their surveys. That's going to lead to more volatility in the surveys. I think we should take a step back and, from our standpoint, and I think the standpoint of businesses and governments and
That's why I hate trading during news, just so
good data on the
doesn't
state
follow
of the economy
technicals
at
as
any
well.
time is a huge public good. It helps, it not just doesn't help the Fed, it helps the government, it helps Congress, it helps the executive branch. More importantly, really, it helps businesses. They need to know what's going on in the economy. The United States has been a leader for many, many years in this whole project of measuring and understanding what's happening in our very large and dynamic economy. And I hate to see us cutting back on that because it is a real benefit to the general public that people in all kinds of jobs have the best possible understanding of what's happening in the economy and hence what's likely to happen.
We got down back to that first ad, the 25-26 from the top ad, better area 45-50.
Remarkable how many
Got a nice move,
things you
just
need to
no follow through.
understand to estimate U.S. GDP. Very, very difficult, and it's so important that we get it right. I just would say it's not a place to. I would want to keep investing in that, for the good of the general public.
Doesn't have to drop soon, but I liked the idea of it with that aggressive volume on the move down, but just data.
Hi, Victoria Guido with Politico.
Speech-based
So
trading.
You're conducting this monetary policy strategy framework review, but next year we're supposed to have a new Fed chair, and I'm wondering if that affects at all the way that you're approaching this. How do you ensure
I'll
that
put this at 60.
framework will actually be durable?
If we've passed 60, I'm out of this trade.
Goes back
Move my
to-
hard stop to
goes back
60. Just
2012.
4 points.
And it's the committee's document.
Don't got a lot of risk on, so I don't mind.
A new way to do things. It's been
Letting
an
it
evolving
wiggle.
document, so it shouldn't depend on who the chair is at all. It should depend on what's happening in the economy and what the committee wants to do. So yeah, it isn't really tied to.
On the bright side, we got to move back down. We can show that the sellers wanted to tap
Every
in.
year now we do it every 5
Downside,
years.
we are not getting any follow through.
I've never heard anyone raise this issue that,
Of course, he could say something good and it pops, or says something bad and it drops. It's not really technical based when speaking.
Not going to be up to me to decide.
Is that
Whoops.
affecting at all the
There we go.
who you're consulting with?
Not at all. Not in any way.
Thank you. Chair Powell, Matt Egan from CNN. Relatively low gas prices this year have helped drive down inflation. The trend is starting to reverse given the crisis in the Middle East. How are you thinking about how especially inflation and
Come on. Small piece off. Just to be safe, we're going to put our stops now at 50, 54.
When there's turmoil in the Middle East,
Wow, that literally immediately just went and hit my stops there.
those things don't.
On the bright side, I got a few contracts off. On the downside, that literally just went immediately
Of course, in the 1970s, they famously
and hit my stops at 54. Wow.
Very, very large.
Wow.
We haven't seen anything like that.
Well,
Now, the U.S. economy is far less dependent on foreign oil.
very small,
than it was.
slightly red, still basically break even. Anything around a few $100 we consider break even.
I just got to ask you about artificial intelligence. Some technology executives have recently been warning.
Well, damn. I really thought we were gonna get that next move there.
Jobs and significantly increase the unemployment rate. I'm wondering how concerned you are, if at all, about.
Thought we were getting the next move up.
To employment.
So this is the question. The question really is, will AI be more augmenting labor or replacing labor? And I wouldn't, we all see those announcements.
And we ended up red
I wouldn't,
for $80. Are you kidding me?
A couple of data points, because AI should be creating jobs at the same time. It may be replacing, it may be doing both. Anyone who's
$80? You kidding me? Is $80 gonna win a 7 going an 8-day win streak?
and how capable it is. And it's just a
80
different
freaking
thing.
dollars?
I think this is something that certainly has transformational potential, and probably we're in the very early stages of it. They say what you're seeing now.
The bright side, we got the move down to 12, so from the
even more effective. So
last
I think it's
ad,
really hard to
13
know.
points.
Of
From the
course,
best
there are
ad,
optimists who feel
30
like it's gonna
points.
make everybody much more, productive. And there are those who think it's going to replace an awful lot of jobs right across the income spectrum. White collar, blue collar, and everything. So I just don't know. We don't have a house view on that. But this is going to be a very important question for some time.
Thank you. Greg Rapp from Market Watch. I was wondering if you could step back a little bit, Chair Powell. There's a spate of articles and a lot of op-eds now in the newspapers saying that the U.S. economy and the global economy is going through this.
Oh, whoops. There we go. Oh.
Profound change, akin to the end of the Bretton Woods era in the 1970s. You talked about Bretton Woods a little bit, and you said that Bretton Woods, the Fed staff had to change how the dollar movements of the dollar was impacting the economy. Are we going through something like that now? That are you having to change how you do monetary policy? Is it that fundamental a change underway? Thanks.
It's basically asking if the dollar's dying.
Change. From a geopolitical standpoint, from a trade standpoint, from an immigration standpoint, you see this not just here but everywhere. So there's quite a lot going on. It doesn't change the way we do monetary policy in the near term. And it doesn't change our objectives or what we need to do. And these things are not really our issues. They're really issues for elected governments. All of those issues are really for elected governments. But there's no question it's a time of real change, and very hard to see where that goes. Will it be? There have been many things written about how it's going to be a more inflationary time. That's possible. It's not guaranteed. AI could cut in the very other direction. AI could make people much more productive and push in the other direction. I don't know though. But you're right. But honestly, our focus is much more practical. That is, how do we keep inflation low and employment high in the near term? That's really what we're about.
Cut the mic and let us trade. Seriously. Bro's been yapping for an hour.
What is the view about the growing amount
Made 250 on this 10. Yeah, we got depending on your ad, 12 to 30 point move.
rise in the unemployment rate and the ability of workers to demand wage hikes or not in this environment where you have inflation surging?
You don't really see unemployment going up. You don't see increased slack really. At the
Oh, it's just yapping.
4.2% unemployment. That was for many years. That was
Just yapping.
It happens to have come up off of an even lower level as we came out of the pandemic. We were as low as 3.4%, but 4.2% is probably at the low end of estimates of the longer run, sustainable level of natural rate of unemployment. So I guess I wouldn't agree with that. And also, in terms of wages, real wages after inflation have been moving up sort of more than was consistent with 2% inflation. They're still moving up at a healthy clip, and I think much more consistent with 2% inflation given a reasonable assessment of trend productivity. So it's a pretty good labor market. You're right that the level of job creation has come down, but so has the supply of workers. The change in the supply. But
Yeah, oh my goodness. Well, damn, break even on the day.
Pretty stable at 4.2.
Break even on the day.
Those are good numbers. So it's a pretty good labor market. The thing is, there's a more concerning thing is there are not a lot of layoffs, but there are not a lot of job creation. If you're out of work, it's hard to find a job, but very few people are being laid off at this point. So that's an equilibrium we watch very carefully, because if there were to be significant layoffs, and the job finding rate
Yeah,
would
check
remain
this
slow,
one,
you would
with
have a lot, you would have an increase in unemployment fairly quickly. That hasn't happened. It really hasn't happened. So the U.S. economy has defied all kinds of forecasts for it to weaken really over the last 3 years. And it's been remarkable to see just again and again when people think it's going to weaken. Now, eventually it will, but we don't see signs of that now.
Hi, Chair Powell, Jean Young with M&I Market
Got
News.
40 minutes left.
There's been a lot of talk about cuts.
Dude, I'm about tired of listening to this interview, guys.
Why do you think there are no forecasts for rates to rise?
I don't want to listen to this shit
To
anymore.
stay where they are next year, given that the projection for inflation is to rise to 3%, and there's a lot of there's some skepticism over whether those price hikes will be a one-time event.
So there are a number of people on the committee who wrote down no cuts this year, but some cuts next year. So, look, I think, people are writing down their most likely path, right? They're not saying there's zero possibility of other things. Really, it's, think of it as the least unlikely path in a situation like this where uncertainty is very high. I think, again, people write down their rate paths, and they do not have like a really high conviction that this is exactly what's going to happen over the next 2 years. No one feels that way about their rate path. They feel like, what am I going to write down? I mean, what would you write down? It's not easy to do that with confidence. So I would just say it that way. We don't rule things in or out. Certainly a hike is not the base case at all. It's not something people are writing down. But in the meantime, we do the best we can with these forecasts, and I think they're representative of the different forecasts and different reaction functions that people on the committee have. So thank you very much. Thanks.
Oh, thank gosh. Go away, bub. I was getting tired of listening to that guy yap. Yapping. All right. Yeah, lungs are looking a little better now. Totally. As a reminder, TikTok, make sure you guys are all tapping into the YouTube, J Dunn Trades. If you're on the YouTube, make sure you subscribe. It's going to be our main live stream very soon. JDUN Trades, appreciate y'all being here. And if you're trading on prop firms, either Apex or Tradeify, make sure you're using code JDUN for your best possible discount. Code JDUN. 80% off on Apex, 30% off on Tradeify. Appreciate y'all using the code and choosing discipline over dopamine. Appreciate all y'all being here and rocking with me during Power Hour. If you guys are trading on prop firms, either Apex or Tradeify, make sure you're using code JDUN. I will always do my best to help you be disciplined in your trading, help you be focused, and help you trade with an edge. I like longs over shorts right here until we break the structure. We rebounded with strong volume. We're moving on up, making higher lows. One trade. Technically speaking, red, but break even. Could probably scalp it back if I really wanted to, but that's not discipline over dopamine. I'd like to find a good setup. You got Jerry Tundler going on right now too. If you're bored with this price action, go check out Jerry Tundler. That's a perk of being inside this community, inside Team Bull. Whoops. I like the way you trade. Discipline and patience. It's so important. Thank you. It means a lot. I'm not seeing a whole lot that I love here. Make me the new Fed speaker. 0% rates, nuke the economy. Bruh. Six. So, Mr. Gene?
Hello, Mr. Jacob. How are you doing?
Oh, just watching this. If we get this closed down here, I'm trying shorts one more time on the pop up. Now that
Chopping or is it good?
it's just not chopping, but it's not giving a lot of range. There's no expansion.
Yeah. They're doing this smarty starters.
What?
They're doing this smarty starters.
Yeah, they are. Let's Come on, as this next pop up, looking for one more piece of shorts, small size. It's the only thing I have on watch right now. I'd like to see up in the 40s. I'd like to see up in the 40s. Tried it one more time at 40. One more time at 40, guys. Tried the shorts. One more time. One more time, tried the shorts. It's higher risk. 40 to 50. Keep stops 30 points out. If we bounce this, then I ain't got nothing else. Adding my second piece of micros here at 50. Not adding any more. My stop is 30 points out. 31 points. If we buy that back up, then I'm out for the day. We had higher volume on that move down. Broke the structure. So we'll only give it a little room, see if we can push further. Lighter size, you're gonna have a little more room to breathe.
I'm so very bearish on the hourly. That's a good plan.
Yeah, it's worth the risk to me. You know. Worth the risk to me. If we go back up and break this structure again, it's just, we're likely just going to sit around and do that for the rest of the day.
So 12. Yeah, I thought I had 9 in my stock, but I have a box of 12. So I like 8 rolls as well. Unfortunately, it's the same shit. At least I got what Cleveland's 8, so we're not going to run out. Take 10 for me. Sorry?
What's going on there? Oh, whoops.
Yeah.
What's up, Mr. Gene?
Hello, my friend.
This price action's playing with me, Gene.
I'm not doing anything. I closed my eyes yesterday, though.
I had high hopes for this aggressive move down. It's gonna let me down. Maybe it's gonna let me down. It's looking like it might. No, I'm not moving a stop loss to 90. That wasn't part of my plan, so I'm chilling. I'm down to lose around $700 today. I was hoping we get the continue move down to low a day. That candle doesn't look good. That don't look good. Let's see. That ain't what we want to see. That is not what we want to see. That is not what we want to see. That is not what you want to see when you're trying to catch a continued trend down, move on a retest. That is not what you want to see. The volume's lower, which is decent, but yeah, this is likely going to go hit the stop. Gosh darn it. Which it looks good. We broke the structure, right? You can see. There we go. Oh, whoops. Gosh dang it. It's annoying. It stopped me at 76. I was charting this. Let's see how much we lost. $680. We've done $680. So 600, we already done 80. 680. 680. Hard stop, stop me out. 680 bones. But what I was saying was that we had this aggressive move down, broke that structure. I wanted to see us continue down, retest back up, minimize the risk here, and then test this low day. Looked good, strong body, strong volume, just no continuation, lots of chop in here. Got to restart the win streak again. So I'm likely, there's a very low chance to take anything else. What do you say, Green Eyes?
Done.
Oh, they said something, bro. Oh, whoops. Yeah, it's just power hour is more. Power hour is more for me is just talking about trading and psychology and stuff. My edge is really a New York session in the morning. That's honestly a setup. If I would have seen that in the morning in New York, I'd take that 10 out of 10 times. I understand my average winning day is over 1,000, 1,200, 15,000, 1,500, 2,000 plus. So if I win 4 days at 1,500, that's 6 racks. If I lose $600 on a trade, $1,000 on a trading day, still net profit 5K a week. That's how I look at things. It's all from a risk perspective. Especially when I had more risk, like when the candles, that was the only red flag for me is the candle high, and that was a little high for my liking. I really had high hopes for that. The first one was technically, it moved anywhere from 20 to 40 points or 15 to 40 points, depending on your entry. It's just, I wanted more out of it. Didn't want to settle for 1R, I wanted 1.52R. One of me. We learn and we win. That's all we do. We don't lose. We learn. We learn, baby. Here to learn, baby. That's right. Yeah, I don't like trading off Fomc days. It's not the last year. Discipline and consistency is what it takes. Jay Dunn needs Jared Tundler. If I was on tilt, I would. I haven't gone on real tilt in a long time. Long time. I'm a pretty good loser these days. Still changing their tires. What? Put you out there? Hey, I like streaming and hanging with y'all. How do you get to the point of accepting losses and not going on tilt? It's all part of the journey, man. You get to a point in your trading where you embrace the losses. If you can look at a trade and say, well, I have good risk reward here, the setup's here, the potential trend continuation is here, and it just doesn't work out, that's part of the game. But if you consistently hesitate, or you consistently oversize your losses, then you're never going to make progress. But losing is a part of the game. Once you become acclimated to losing, you know that you're going to take 10 trades and lose 6 of them, it changes things. You also learn sizing plays a big part. If you're taking massive losses, of course it sucks. That's why you don't ever see me taking massive losses. If I lose, it's all part of the plan. KJ, I do. I think as long as you're confident in your entry and your risk is managed, for sure. Yep, learn a lot to walk away too. Learn how to walk away, that's right. As a reminder, guys, if you're on the live stream, be sure you're using code JDUN on Apex or Tradeify. We'll get you the best possible discount. Apex will get you 80% off right now. Deal ends soon. Tradeify will get you 30% off. Whenever you use code JDUN, I want you to remember, discipline over dopamine, baby. Appreciate y'all rocking with me. I do my best to catch you guys winning trades. Obviously, I do lose sometimes, but it's always managed. It's always small, and we always look to have more winners than losers. So appreciate y'all using code JDUN. If you guys have any questions about prop firms, you can always message me on Instagram at JDUNTrades. It's been a long time, Morzan, a long time. A few years in. Not immune to it. I could still have a red month. It's been a really long time, but if I don't manage my risk, it could certainly happen. I prefer Tradeify and Apex over Top Step, but Top Step's cool. Top Step's fine. Discount code won't work though. Code JDUN will work at Apex and Tradeify. Yep. Apex is 80% off right now. If you use code JDUN, you get 1 day pass and 80% off for life. Trading's been okay today. I mean, I'm down $680, but I shouldn't have honestly traded. Post Fomc is what it is. Whatever. I'm salty I gave back my win streak again. Be honest, in a perfect world, I'd say longs look good after this. I wish this had a bit more volume, a little more push up here, but we're testing this 200 again. We're inside this range, so I'm not taking them. I'm not taking any more trades, but yep. Honestly, I could even lose. I could lose 2 out of the 3 days of the week. I could lose, say, Monday, Tuesday, and win Wednesday, Thursday, Friday. Still be green. I didn't like with the orb this morning how the 5-minute candle structure looked. That's why I didn't take it. I honestly, just for the past year, haven't traded FOMC days well. Could be the end of me trading FOMC days, make them hang out and chill still, but no need to force things that aren't there. You know? As a reminder, TikTok, make sure you guys head on over to YouTube. My YouTube channel is JDUN Trades, JDUN Trades. If you're on YouTube, make sure you subscribe. I'm going to be dropping the 1.5-hour free webinar tonight. Sure you guys go in, click on the YouTube Live, and hit that subscribe button. I'm not long, no. Whoops. Yep. I'll likely be live again on Friday too. Maybe. I haven't decided yet. I recently found your channel and you have the best orb method I've seen so far. Thank you. I do my best to teach it. I'm releasing my 1.5-hour long webinar tonight on YouTube as well. So make sure you guys are subscribed at JDUN Trades. Go subscribe and turn on the bell notification so you get it when it comes out. everyone here. Nice job, TK Lewis. I'll trade breakouts, but on the retest, I don't like breakouts straight down unless it looks really, really good. Appreciate y'all being a part of the Discord. I see them bull tags. Each one of y'all should have a bull tag. Click on where it says bull on my name. Get your bull tags moving. Let's go, baby. Yes, Chris got the bull tag. Aggressive move down for Algo. Let's go. I see you, KJ Equity. I see you with the bull tag. Okay, see you. Let's go, Caesar. Yes. What's the biggest earnings I had in a day so far? 88,800. It's almost 90 grand in a day. If you want to sub to the YouTube, it's JDun Trades, JDUN Trades. I'm live there right now. I go live there every day. So if something ever happens to TikTok, JDun Trades on YouTube. It's going to be our main live stream here soon for the free streams. So you guys can go to YouTube, or you can go to the link in my bio on TikTok. Click on my profile picture and click it again. You'll see my IG. That's where you can message me. And my YouTube, that's where you can sub to get the full screen free lives. Let's go. Appreciate y'all subbing. Appreciate y'all subbing to the YouTube, being there live. YouTube, I appreciate y'all being here. I'd like to show my face a few times. We will have the full screen share very soon with the YouTube as well. So we got a lot of production things in the works. Super excited to help you guys. Again, we stay winning 70 to 80% plus win rate. We do it all live in real time with you guys every single day. So tap in, make sure you guys are subscribed, and I look forward to winning with y'all day in, day out, baby. Come on. Hopefully Jared Tunneler was nice today too. Haven't heard any feedback yet, but I'm sure he usually kills it. He usually crushes it.